Are you cash poor yet investment opportunity rich? The challenge that faces many investors is the inability to take advantage of stock investment opportunities as they present themselves. Very few families place saving as the #1 financial priority for the household. But the truth of the matter is that if you do not have any savings set aside, you cannot invest. If you cannot invest, you dash any hopes of becoming financially free and building the lifestyle you've always dreamed about. Start by looking at saving as being a positive, active process and not a passive activity. Why? It requires effort to properly manage your money. Saving to invest opens up new possibilities. Those possibilities allow you to look forward to working towards realizing your dreams. So how could you ramp up your savings and better position your capital to take advantage of investment opportunities? Here are 4 approaches to consider in order of priority. First, get into the mindset of always paying yourself first. Make your saving process as automatic and disciplined as possible. Automatic, by regularly transferring your earned income into a dedicated savings account earmarked for investing. And disciplined, by using that money to only invest in 3 types of opportunities that will move you forward, namely your investments, such as stocks and options, your financial education, or your own cash-flowing business. As well, learn to live below your means but within your needs. By having a frugal approach to spending, you create a more positive saving routine for yourself. Second, consider selling something in order to raise some cash in the short term for investment purposes. Do you have recreational vehicles, an extra TV, or spare furniture that you could sell on Craigslist or Kijiji? Realize that this is a short-term sacrifice that empowers you to start building wealth. Keep in mind that you can always treat yourself later once your financial affairs are in order and you have learned how to consistently grow your money through investing. Third, increase your income over time by either adding more value in the workplace and then asking for a pay increase, or getting a part-time job specifically for reducing any bad debt and for your investing. It is important to allocate the majority of your additional cash for investment purposes. Sure, go ahead and reward your hard efforts by spending a small portion of your additional income on creating lasting memories. However, do not fail to lose sight of your initial goal. Stay true to your saving to invest discipline. Your long-term sustainable wealth could very well depend on it. Fourth, as a last resort, consider using opium, other people's money, to help build your investment portfolio. If you're looking at getting a personal loan or line of credit for strictly investment purposes, do so only if you can comfortably meet the following 4 criteria. Number 1, if the loan interest rate is no more than 1/3 your expected rate of return on your investment. For example, if you anticipate generating a 15% return selling covered call options, you should not take on a loan that exceeds 5%. Number 2, if your loan can be easily paid off within 1 year from your annual savings. Number 3, if you have your bad debt under control, your credit cards and consumer loans. And number 4, if you have a proven track record of managing your money well. You need to be honest with yourself. Hopefully at least one of these 4 approaches will resonate with you and inspire you to take the next step. Begin creating your desired lifestyle by starting with the simple process of saving more for investment purposes. To your ongoing success as an investor,